Michael, it's great to have you back.
I do.
Financial conditions. You were talking about how they were tightening the last video I saw, and how do you react to what happens day to day in the court? Has it become more difficult for you to be a position trader in this environment, buddy?
Well, I mean, I'm not a position trader.
You
Most of
have
my,
positions.
yeah, I mean, I have positions and obviously like trying to manage those positions in this environment, haven't really been easy. And certainly the other piece too is you're, kind of waiting for the news flow and you're expecting things like, semiconductor tariffs to come, but the market moves a lot faster than it happens. And so, you open yourself up to this risk of, well, do I chase it higher and add it to my portfolio now and know that semiconductor tariffs could be coming around the corner, and then the market, shits the bed again, or,
Yeah, it's
does it
tough.
not, you know?
Yeah,
And and
yeah.
um
We're
and
trading under a whole new regime that historically, um, I don't think has been like this. I know a lot of comparisons to the 70s, but I was around in the 70s, and uh, you know, I don't remember uh, Nixon affecting the markets the way President Trump is,
yeah, I
or
don't even know.
I don't think he had a meme coin either.
Yeah,
So
well, I don't really know if he's affecting the markets so much. I mean, he is obviously, but a lot of it is just the day-to-day sort of algorithms trying to parse the headlines and making moves out of things that shouldn't happen or that shouldn't be. And so I mean, again, he puts a tariff on Europe on Friday. He
yeah,
takes it off on Sunday night, and the market's
yeah,
higher than where it was before it started.
right.
So it's like,
So I mean, well, name the last time you've been able to make a market, describe a market that you just described in your trading career.
maybe during COVID.
Okay,
It was
maybe.
like, like in COVID, it was like, well, we dosed the first person with the vaccine, so the market goes up.
Yeah,
Uh,
okay,
we have 12 patients that responded positively out of 20, market goes up. So
okay. Maybe
that's about the
there's
best, or the unemployment rate was 23%, but it can't get any worse, so the market goes up. I mean,
yeah,
that's basically it. And it's like you got to think in that not what we're doing right now, but what's going to happen, what's two moves in front of it. And that's the way the market's trying to respond to everything.
yeah.
Um, and,
So
and
let's see what you're looking at, Michael. I know you look at a lot of things that the most traders, you look at, you're a good technician. You look at charts, but you look at what's happening under the surface with,
yeah,
term rates and what's
yeah.
happening with yield spreads. And why don't you share your screen and let us get a glimpse into your mind. We're gonna get a glimpse into Michael's mind
It's
today.
kind of, my mind is kind of uh,
Scrambled
scrambled this
eggs.
morning. So,
Yeah.
uh, well, I mean, first
Okay.
I was looking at, Nvidia, obviously, because it,
Yeah.
it matters quite a bit here. And the
Yeah.
interesting thing about Nvidia, just not to, the key here for Nvidia, at least for today, is this 140 level.
Yeah.
Because that's where all the delta, it's all the delta, the open positions are all really above 140. And it was interesting because the 140s strikes that were trading yesterday were trading.
Huge, huge size, right?
Yeah, they traded a lot of volume. So here's yesterday's volume for this Friday's expiration, and they were trading at 247. So, when you look at the stock trading at 142, if you own those calls and they expire tomorrow, they're not really going to be worth very much today, in terms of really making money on them. And so, if you notice the stock's been hanging around this 142 all morning. And so I'll be curious to see, what really happens once this stock opens, because if this thing goes, if it can't hold this 142 level, all these people are going to start unwinding these 145. Look at all the volume at 145, all the
Yeah,
volume at 150. The stock will just start, moving down. And once it gets below 140, that's sort of when things can really unravel. But I mean, outside
interesting.
of that, I mean, when you look at the market, I mean, the everything with the tariffs is beyond, confusion, and the S&P minis have obviously been giving back all morning. And I think really the more telling sign of how the market's thinking about these tariffs isn't really so much what's happening in your normal currencies and normal things that we look at. But it's in the currencies that really get affected by these tariffs. And you can see the Taiwan dollar, huge
Yeah,
exporter of chips, continues to strengthen. I mean, this has been a massive move in the Taiwan dollar. I mean,
huge.
when do you see those types of moves, Dale? I mean,
Yeah,
this is a
like
10% move in a
like
couple of days.
well, not since Turkey
Right.
when the lira was imploding, but
But
this
in
is
this case,
the
it's
opposite.
strengthening, right?
Yeah,
Right.
it is.
Yeah.
Right,
It's like the inverse FX crisis, Asian crisis, FX Asian crisis, right?
right.
Um, and it's the same thing with the Korean won. I mean, it's been strengthening. And if the tariffs are all said and done, then why are they still strengthening? And the yen is basically given back all of its losses overnight, and is now
Yeah.
strengthening again. So,
No, look
when
at the dollar. Dollar's given back all of its gains.
right. So I mean,
Look
it's
at
a big candle, right?
yeah,
And
it's
and
ugly.
and and when you look at, yields, I don't really think today's numbers really matter all that much. So, big deal continuing claims are at 1.9 million. They've been there really for some time. And you would expect, as, the number of job openings come down, people are going to it's going to be harder to find a new job. And I think that's pretty much being reflected. And so, you know, 10-year kind of being flat at this point, not really a big deal. I still tend to think that rates are going to go higher. But, I mean,
Can
when
we
you
go
look
to
at
4% first, Mike, back down to that support level? There's a big triangle and have people feel like there's relief. That's it. Rates have peaked and then rally back to new highs and 5.5% yields.
um
Down to 4 and then up to 5.5, make new highs in yields after this pullback.
I don't know that you're going back to four.
Okay.
Um I think you have a better chance of hitting five before you hit four. Um
Okay. Fair
maybe
enough.
maybe that's I mean, you're at 447, right? So the odds are 50-50 basically at this point.
All right. Okay.
So I mean, I don't know. I mean, it's going to largely depend on, how this job data comes in next week and how some of this inflation data comes in. But, the deficit is obviously getting to be an issue, and the debt's
But
getting to be a bit of an issue. So
yeah, but that's pretty heavily publicized right now.
it is.
Have
It
you
is.
have you looked at how people are positioned? We've gone from extreme shorts in treasuries to even more extreme
Right.
shorts in treasuries. So
Sure.
does that tempt you to try and maybe put on a long in TLT for a trade, at least for a trade?
Um, well, you're assuming I can move fast enough to do that, and the problem for me is that I can't, right?
Okay.
So
Uh,
which is why I really try not to actively trade anymore, because I'm
okay.
just always getting pulled in a million different direction from my kids and my family and stuff. So
Yeah. Yeah.
it's just impossible for me to always be in front of a computer screen.
Yeah.
And so, I mean, again, am I, from my perspective, I'm not actively writing about or actively talking about, and this is really more about how I think about things. Um, it's more about what my research is sort of suggesting and what I'm
Yeah.
publishing. And I wouldn't be, I'm not publishing certainly right now that 10-year rates going back to 4%.
Right.
I'm more
Okay.
of the mindset that, as you stated, term premiums are going higher, which is basically the added rate that investors are asking for to be holders of these things. The other thing too is that when you look at if you look at where the treasury market is basically, or the Fed fund futures are telling you where, the neutral rate is, or the Fed terminal rate is at 330. And then you just look at where, and you kind of think about the spread between, um, let me see if I can find this quickly while we're doing this. But while I kind of talk you through it. But in the meantime, like if you think about this, where the spread is, and you think about where, Fed fund futures should be, and historically what happens here, this is it right here. Basically what this chart is showing you, let me just kind of pull things back. So I mean, if this is your Fed funds rate over time, and this is, your spread between the 30-year and the Fed funds rate over time. And the market's basically telling you right now that the Fed funds rate next year is going to be 330. And then in 2027, the Fed funds rate is expected to be 350. What it's kind of implying to me is that the Fed funds rate is going to bottom in 2026, somewhere in that 330 area, because 28 goes up to 380. And so if we look at
Okay.
the
Well,
historical norms and we say, well, why, if the Fed funds rate's going to be 330 at a low, why should a 30-year only be 5%? I mean, historically that premium is 200 to 400 basis points. So you're talking about at a minimum, that, a 30-year should be pricing somewhere around 6.5 to maybe well over 7, if this plays out historically. And when you look at a 10-year, it's the same
yeah.
thing. I mean, the 10-year historically tops out. I mean, this is going back to, 1971. It's historically topped out at this 350 basis points above Fed funds. So, again, if Fed funds are going to bottom somewhere, let's say around 3, you're talking about a 6.5 on a 10. And if we look at I don't know if I have the term premium here. Here, if you look at the term premium, I mean, the median term premium going back to 1961 is 1.5%. Right now, the term premium is only about 90 something basis points. So you could add another 80
Yeah.
basis points on top of
Okay.
that just to get back to the norm. And I mean, if you want to play technical analysis with this as well, you can say that, the 10-year had
Broke
really
out.
strong, it had strong resistance here, at this 2015 level, and we've broken out. And
Yeah.
if I were doing technical analysis, I would say, oh, this looks like an inverse head and shoulders to me, and we're
You
moving
are.
back
You
to,
are you are doing
yeah,
technical
and I would say
analysis.
we're probably going to see a term premium move back above 1.5%.
Okay.
So I don't, that's why, like, when I look at everything, I say, well, how do you get a 10-year to really go lower? The only way you get a 10-year to go lower from here is if we have some sort of recession of some significance, that Fed fund futures start pricing in lower Fed funds rates in the future. And so what I think is really happening in the treasury market isn't so much that the market's worrying about debt and deficits. The market's just reassigning term premiums to higher levels and reassigning where the new neutral is for this economy. And if that's the case, then rates have further to go. And also, the other factor, I think, is that, the anchor of the world on interest rates is no more. A
That's a
Japanese
great
30
great
year is
point.
trading at
Yeah.
3%. And, typically, again, when we kind of look at these spreads, the difference between a US, well, we could just do the tens, the Japanese, US, and, is right now is 3%. So, I mean,
Well, let me ask you something here, Mike, because we had the panic last August with the unwind of the carry trade.
yeah, I think
And
we
then
spoke around that time.
yeah, and then we had this huge rally and the end weakened again. So, uh, is there another chapter to this unwind? Do you think they got it all done last summer? Because now the carry trade is it doesn't it doesn't make as much financial sense.
I don't
We're
know, Dale.
paying.
I mean, you're the FX guy. What does this chart say to you?
It says that long term, I think we're going to see a much stronger um, Japanese
Yeah.
yen that we're going to break down.
Right. So that would tell me the carry trade's not done. It's not on.
Okay, okay, all right, because
And
they're paying
look,
more.
I mean, look, this is another. I mean, I don't know. I'm sure you're familiar with, cross currency basis swaps and all that other stuff.
I'm not.
But this is the Japanese yen cross currency basis swap spread. And basically, when it's really low, it means that dollar funding costs are really high. And when it's up here,
Okay,
it means that dollar funding costs are very, loose, so to speak.
huh?
And what's interesting here, right, is if you take the SPY and you overlay it, it's the same trade.
Oh, okay,
So
nice.
is the Japanese yen carry trade unwind done? I don't think so. I don't
Yeah,
I don't know.
yeah. I mean, it's more
It's
the
all
currency is more expensive, and the rates.
We're
There's
going higher.
Yeah, it's the opposite of how it worked for a decade.
Yeah, I mean this is the Euro swap basis swap, and it's the same thing. So I think you have the same trade going on in across different regions of the world, and it's really all just about liquidity and dollar funding. And
Yeah,
so I don't know that this is by far over at all. And I think, I'm thinking that I don't know what I know they did a 40-year auction in Japan the other day. I don't know what the rate pricing was on it, but I obviously don't
wow.
know that this was really down 23 basis points last night. I'm thinking that the maturity or the yield on it must have been lower. I haven't had the time to look at it yet, but clearly, again, the low anchor of the world is kind of gone. And even if the 40-year in Japan isn't at, 350 anymore, but it settles at 3%. I mean, that's, really big from when it was at 10 basis points in
Yeah,
2019.
yeah,
That's got to have some sort of ramifications on that trade.
yeah, definitely. Where are you at with S&Ps here, Mike? Do we have the $1 million question? They're polling people, so I'll put you in the CNBC poll. Will the April low be taken out? What does Michael Kramer say this year?
I mean, well, I was one of the few people that was looking for an S&P that could be in the fours, right? And so
Yeah,
that was, we did get there, even though it was brief. Um, I mean, from a fundamental standpoint, I certainly can say that, markets are trading at, high multiples, high valuations across, you name your pick, right?
yeah,
Your price to sales, price to earnings, price to cash flow, price to EBIT, whatever it is. Markets are very expensive. Earnings estimates are coming down, growth rates are slowing. That would suggest we have a lower, P/E ratio. And you're a technician like me. Is this if we close here on the S&P, let's say we don't get a big rally today, is this a 2B top, Dale?
yeah. Or an
What's it called?
ABC for four,
Yeah,
irregular B,
yeah. So I mean, I,
and then
yeah,
another high.
yeah. So I don't know. I mean,
Yeah,
a lot of like I said, like if you look at the swaps, they're certainly not suggesting higher prices.
right.
I use these BTIC S&P 500 futures, which basically measures the equity financing costs to go out and get to lever up, an institutional investor to lever, and that obviously has collapsed.
Yeah,
Um, and this has tracked with the S&P for some time, and when I had done some analysis on a YouTube, I don't know if you saw it, but the one thing that really struck me as being very similar to 2022 was if you notice during this decline in 22, whenever the S&P rallied, you never got a rally in the equity financing costs. It never went with it.
Yeah.
In fact, it just continued to drop, even though, here's your big
Right.
August rally, just continued to
Yeah.
go down. Got your big, March rally, continued to go down. During
Nice.
2023, it was rising right along with it, right?
Yeah.
Every time it made it, and then it had that blow off in December into that Fed
Right.
meeting. But if you look at
Right.
it where we are now, notice we got, the big rally here. Financing costs continue to go down. We've gotten
Yeah.
the big rally. Financing costs have not responded at all. So, I'm looking at this and saying it looks more like this than it does like this.
Yeah. So
And
there
so
should be a reversion to the mean kind of trade setting up with the decline.
I
It,
mean that I'm surprised because we've gone further than I thought we would. I
yeah.
mean, but that's the
Me too.
market for you.
Yeah.
Market always goes further than we think. And it always happens sooner than we expect. So, I mean, when you look at the ancillary data points and you think about where rates are going to like potentially heading, I mean, it's hard and you have valuations where they are. I mean, it's hard to be like, we're going to 7,000, but who the hell
Okay,
knows?
you brought it out. That's what I was going to wrap it with. Because the melt up guys, anywhere from seven, I even know guys looking for eight.
Yeah.
And man, early into next year, give me the fundamental narrative that would drive the S&P up to 7K.
Well, earnings estimates for next year are around um, uh, $300, $295 per share. So even at 20 times earnings, 6,000 is about the best we're going to do, right?
Right.
So, I mean, at 25, you would need to get the S&P at $300 per share. You would need, I'm so tired. I can't.
Lower rates?
No, you would
But
need the more P multiple expansion.
okay. All right.
So you would
Okay.
need higher PEs, right?
Yeah.
And you're talking about a P that probably needs to go to like 25 or 30. Not 30,
Okay.
but you know what I mean?
25. Yeah,
Yeah,
up
it
there.
needs to go higher.
Rich,
Um,
very
yeah,
rich.
and
Yeah.
and you also need to see and really to drive the higher multiples, you need to see credit contract further, credit spreads. And so you would also need much more liquidity in the market to do
Okay.
that.
So
And
you need the Fed for this to happen.
yeah, I mean, you
You need
need
a Fed put.
basically something to cause more dollars to become, and right now the Fed's not, there's no more money in the repo facility to drain. I guess maybe, the ECB or China could do something. But I think it's harder for that to happen. Um, I, I don't really see the tailwinds for that.
Okay.
So,
Yeah. So that's what I mean. So I mean I've been trying to figure out what would drive it to those price levels.
I mean, look, it can happen. Anything can happen. And I would
Yeah.
never have expected to us to even get to 16,100 if you had, I mean, if you asked me that a year or two ago, I would have never, I think we did. And I never would have thought we could have gotten there.
Yeah.
So, who knows? I mean, zero DTE has changed a lot of things, I think. And I know
Right.
that
I
nobody
keep hearing
wants
that
to talk about it, but
because they're making money off it.
go look at the DAX and find out and figure out the exact day that zero DTE started, and you'll see the similarities between the two markets before and after zero DTE. And so I don't know if something has fundamentally changed in how the market actually operates anymore, but I certainly know that on a sizable pullback, I would like to add the CBOE to my portfolio.
Okay. All right. So
Because if you
maybe
can't beat them, you got to join them.
that's right. Maybe so I mean 5,600 anywhere down there be a nice break to buy in your view.
Where?
56, 55. 55 was the first rally out of the hole, rallied from 48
I
to
mean, yeah, I mean,
55.
if you're burning, if you have money burning your pockets and you want to take a chance, yeah, I mean, probably somewhere around this China tariff thing,
Yeah.
get that gap filled. That certainly
Yeah.
de-risks it a little bit.
Right.
Um, you know. So I don't know.
Otherwise, you're thinking the better buying opportunity is more like back under 5,000 S&Ps.
I think from a long-term perspective, yes. I mean, if
Okay.
you're a short-term trader, it doesn't matter.
Yeah.
But if you're a long-term investor and you're trying to really think about, holding something for more than 15 minutes or holding
Yeah.
something for more than a year, you're taking a
Okay.
chance up at these levels because the valuations across most, especially some of the bigger tech names are quite high, in my view.
Okay. Well, CNBC should add you to the list with Katie Stockton and those guys looking
Well,
for April lows.
I guess I'm not.
You're not a celebrity, as much of a celebrity as
No,
some
I've tried
people.
to get on that, but I've
Yeah.
asked and they don't, I'm too small for them.
I got a birthday card this weekend from my sister, and on the bottom of it is a coaster that says "Legend." And I said, I said, yes, Gloria, I'm a legend in my own mind. But
Exactly.
but anyway, Mike. So um, we're in this time period where you really have to be careful. Um,
Yeah, I mean, I think
it's
you
not a
need it to
great
be.
time to trade, huh?
Yeah, yeah, you have to be. This is a dangerous market. I mean,
Yeah.
I have no idea what President Trump is going to tweet in the next 15 minutes. He could come out with a tweet and say, he's not going to be happy about the taco thing yesterday.
Yeah, what's that acronym stand for again?
Trump always chickens out.
Oh, okay. Yeah, he
Dude,
doesn't like that.
you got to watch the interview and you got
Uh,
to see his face. His eyes looked like they were going to pop out of his head.
I did.
And
They,
that Janine Pirro was behind him, and her face was like taken aback, like I can't believe they just said that to him.
yeah.
And
Anyway,
now there's things hitting the tape right now. Navarro's on TV, so they're bringing out the big guns now.
oh, I thought they had him locked in the basement.
No, he's making a re he's at, there's his name is hitting
They
the
let
tape
him.
at 8:50.
They
They
let
let him
him
out of the
out.
basement.
Okay, well, maybe he wants to talk about war with China too. So he needs a war with China. That's been his whole career.
The
Um,
Trump administration's not surprised by the trade court ruling.
yeah, probably not.
Yeah, so
They don't fear the courts.
right.
So Michael, great having you again, and if you believe in that rising wedge you have in all these uh, different stock indices that you have,
Yeah.
and they truly are rising wedges. Wedges retrace 100%. So it implies if it is a wedge that we're going back to the April lows.
We're undercutting them,
Yeah, right. Yeah.
which is really
Or
what a rising wedge is supposed to be, right?
yeah, but
If you do,
don't trade rising wedges and buy like 50% pullbacks after they break
right, because I
down.
mean, a rising wedge you're supposed to measure like this, right? If you measure from the break,
Yeah,
so that takes you down to 4,600.
yeah. I know a lot of people that were looking for 4,500 before we made this recent ascent.
I was,
Yeah, I
I've
was.
been in that camp since last year, so
What if it still happens, Mike?
it could. I
You
have
know,
no
I
like,
mean,
like I said, I have no idea what he's going to do now.
because you
His
know
section,
what? You know what that would do? Because I talk to a lot of people in the markets, and what I'm getting is people saying, "Well, Dale, did you ride it out and the recovery, did you catch it?" And they are so pleased with themselves
I
that they
know,
didn't de-risk on
I
this
know, and they
pullback.
bought the
That
dip.
and if we take out these lows, that would be a very bullish setup to me because
Yeah,
they wouldn't come back in.
that would be your
Okay,
capitulation.
yeah, that's what I'd like to see in by
I,
July.
from a long-term investing standpoint, that's what I would like.
Yeah,
I
we
just,
always we don't always get what we want, but we
yeah,
get what we need.
a good kick in the teeth.
Michael Kramer, it's always a blast talking to you, buddy.
All right, thank you,
Uh,
Dale.
all right, I hope you have a great summer. We'll get back together in
In the
August and
fall. Yeah,
just see what the world looks like then. But I always look forward to being able to pick your brain and see
Yeah,
your work. So
I love talking to you.
best
So
way,
happy to come back anytime.
yeah. So you could follow Michael on X at Michael Mott CM, right?
Yep, that's
And,
right.
do you have you have a website now besides your YouTube channel or what?
I have my own website, mocapitalmanagement.com. I have a Substack that's under the name themarketchronicles.com. And I'm also
Okay,
a writer on Seeking Alpha. I have a large following there as well, about 50,000 people.
nice. So you're see, so you could run for president. And check out Michael's YouTube stuff. Um, he fills people in with what's happening and gives his insights with indicators that most people don't look at. They look at a candlestick and that's it. So you can also learn a lot about the fundamentals from Michael. He knows them like the back of his hand. So thanks
Thank you.
again. Thanks again, my trading warrior brother.
Okay, see you
Appreciate it.
again soon.
All right, Michael Mott, everybody, follow him. And
Bye.
that's see you, buddy. And that's a wrap. Don't just count your terms and your rates and count your blessings. And I'll see everyone tomorrow to wrap it up for TGIF. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.